So thank you for joining this webinar from Yellowstone Advisory and 5-Minute Pitch. Today's company presenting is PureGold Mining. So thank you for joining this webinar today with PureGold Mining. We're delighted to have with us Darin Labrenz, who's the Chief Executive of PureGold Mining. And he is coming and joining us today all the way from Vancouver in Canada. Before we start, I'd just like to go through a couple of points. You're currently all on listen-only mode, but we encourage you to ask questions. And if you'd like to ask a question, please could you type it into the chat box at the bottom of your screen. We've had a few questions ahead of time, and we will try and cover all questions at the end of the presentation. The format today is a presentation from Darin, which should take 20 to 25 minutes, and then we'll have 10 to 15 minutes for the Q&A. Following the session, you'll be redirected to a short survey, and if you could answer that survey, that would be great. And I think that's all enough of the admin. So without further ado, I'm going to hand you over to Darin Labrenz, Chief Executive of PureGold Mining.
Thank you, Alex, and good afternoon, ladies and gentlemen. My name is Darin Labrenz. I'm President and CEO of PureGold Mining, and today I'm going to introduce you to our PureGold mine located in Red Lake, Ontario. On the screen in front of you right now, you're seeing a stylized depiction of a Canadian flag with maple leaves, and that's a very deliberate call to our jurisdiction. And jurisdiction is one of the themes that I'll weave through this presentation. In addition to jurisdiction, I'll be talking about size, grade, and growth potential. All these are really key elements, I think, in terms of how to create value within a gold mining company. And so, from a jurisdiction perspective, we are located in Canada, which has the benefit of a long history of mining, a strong regulatory framework. Obviously, there's very little geopolitical risk in Canada. With reference to Red Lake, Ontario itself, Red Lake is a mining center in Canada. It's one of the highest grade mining camps in North America, having produced about 30 million ounces of gold to date. Really, the community itself is really founded around gold mining. It's been over 100 years of continuous mining in the camp. And certainly when you look at the community, if you don't work for one of the mines in the area, you work for a business that provides services to those mining operations. So certainly there is no better place to be building a gold mine in Canada. We're also, I guess, at this time really benefiting from a very constructive gold market, and I think that both long-term and short-term drivers for gold are quite positive right now. We're in a period of, for some time now, of declining interest rates, really looking at zero or negative rates across the world, and obviously with the onset of the COVID-19 pandemic, we're seeing an incredible amount of money printing around the world and stimulus, and all of that's been very constructive for gold. But when you look back when gold was last at these levels in 2011, we were looking at a Canadian dollar that was on par with the US dollar. Today, as gold pushes up towards $1,840 an ounce this morning, in Canadian dollar terms, we're looking at 2,470. And so that is because we've seen a real decoupling or disconnect between the Canadian dollar and the US dollar. With our mine, all of our costs are effectively in Canadian dollars, but all of our revenue is US denominated. So certainly we think there's no better time to be building a mine in Canada. We are in construction today. We're about 4 months away for first gold pour and cash flow. But importantly, we see this as phase one of what we view as a scalable asset. And we already have resources that we've identified outside of that phase one mine footprint. We're drilling them today. We're looking to grow them and ultimately looking to scale up our assets. And I'll walk you through that as we move through this presentation. I do want to caution you that I will be making forward-looking statements, and please, for further information, reference our website, www.puregoldmining.ca, and the technical report that's located therein. So as I said, we are on plan. We're in construction, looking to deliver first gold by Christmas time. What you're looking on the screen right here is a processing plant that existed when we acquired this property back in 2014. We are doing significant work inside of the mill, and that work is very well advanced. To date, we've gone through and we've effectively pulled out pieces of the grinding circuit, which sits right in front of us here. We've removed a thickener that sits outside of the mill. We've removed the gold room. We've removed all the piping, the small pumps and motors that you see on the screen here. And that's effectively because we're putting in all new equipment. We've got a new ball mill that's currently being shipped to site, and that will improve the grinding circuit. We're putting in a Nelson concentrator intensive leach, and effectively what that does is it allows us to benefit from the free gold, the high grade nature of our deposit, and it's a very low cost way of extracting gold. And then we'll put in a brand new gold room and automate systems and controls to improve the mill availability and effectiveness as we move forward. So again, that works very well advanced, and we are looking at first gold pour by Christmas time. I think really one of the key factors in terms of building a successful mining company is the people that are behind it. You know, as for myself, I'm a geologist by background. I spent well, I've been in this industry for effectively 30 years. The first half of my career was with a senior producing company. It's called Placer Dome, and most of that career path was operational. I did work in multiple open pit and underground mining operations, and have had experience in really the whole range of mining activities, from exploration through feasibility, permitting, into construction, and ultimately development operations and reclamation. Part of that journey with Placer Dome carried me through the Red Lake, Ontario region. I worked for a mine that's located just to the north of us. It was called the Campbell Mine at the time. It's part of the Red Lake Mine complex, and I was chief geologist for that operation. And that really gave me a good, strong understanding of the, you know, the geology of the area, but also of the benefits and the importance of high grade in terms of a mining operation and its ability to drive really strong margins. I think when you look at that experience, it's something that resonates through our board and management team. You know, collectively, there's 6 of us that really, you know, cut our teeth in the Red Lake camp with strong experience. Besides myself on the board, you've got Mark O'Day, Maurice Boulanger, both with significant experience, Rob Peace with experience in the camp. And then on the management side, our VP Exploration, Phil Smerchansky, and our Chief Geosciences, Chris Lee, really got their start in the Red Lake camp. That experience in Red Lake has really driven the understanding of our own deposit and has allowed us to take something from really, you know, early stage very rapidly through the development of significant resources with 2.1 million ounces of resource at close to 9 grams per ton in the indicated category. We've got another 500,000 ounces of inferred at 8 grams per ton, and then follow up with a feasibility study taking a portion of that mineral resource and creating a probable mineral reserve of 1 million ounces at 9 grams per ton. At site, we're very quickly ramping up our team, and we've got an entire operational management group in place. There's about 100 employees now at site as we drive forward towards first ore delivery. A couple of weeks back, we pulled the team in terms of trying to, you know, really understand how deep that operational experience was. And you can see on the screen here, there's over 68 mines across the world that we've got, you know, played a key role in terms of operating. And they're listed on the screen, but probably more effectively, if you look at it graphically, each of those dots in green represents mines that we've worked on the exploration front, really bringing them towards development. 33 operations in orange that we've built over time, and then 68 mines in blue that we've operated at. That real depth of experience on the management side, the board, and now at the operational team level is a key to our success moving forward. So let's step back into jurisdiction. What you're looking at on the screen right now is an image taken from just around the airport in Red Lake, Ontario. We're looking at a provincial highway that if you follow that trail of red lights, about 20 kilometers from this point, you'll reach our mine gate. So yeah, obviously we're tied to roads, we're tied to grid power. Again, there's 100 years of continuous mining history in the Red Lake camp. In front of us here on the screen, you can see a couple of head frames and a mill. This is part of the Red Lake Mine complex where I worked in the mid-1990s. And when you look at this, you know, the words on the screen, it all began 2.7 billion years ago. That really references the time in the Earth's history that was very active in terms of forming gold deposits. That is the age of the deposits in this area, and they share, you know, attributes across the world. They're often underground mines. They're often very high grade, and importantly, they have very deep roots. So when you look at the Red Lake Mine in the picture in the background here, it starts at surface, and mining commenced in that operation in 1949. And today they're mining at 2.5 kilometers below surface, and it's still going. And so that's something to bear in mind as we talk about the opportunities at our own PureGold mine. So I've got a simplified geological map on the screen now, and I'm not going to go into any detail at all around this, but I do want to reference two important criteria in terms of what defines Red Lake. First, you want to be in the green. The green rocks here have the right chemistry to form large deposits. And secondly, you want to be in the contact between the green and the yellow. And effectively what happened is those two different rock packages collided together. There's a big fault that's formed between them, and it's shown here as a gray line that wraps around the map. And you can think of that effectively as the plumbing system. So you had the gold fluids came up that fault, and when they hit the right rock, they formed deposits. And so from a historical perspective, 30 million ounces of gold have been produced in the Red Lake camp, and it all comes from the two trends that we've outlined here with the red dashed line. On the north side here, that's the Red Lake Mine Complex. It's now owned by Evolution Mining out of Australia. They bought it, closed earlier this year for $700 million. And this is a mine that's been in continuous production for 75 years. On the southern end, we host a key piece of the Red Lake Geology. It's 100% owned by us, and that's what we're advancing today. So we'll look at it in a cutaway here and really just give you a sense of the scale and size of the opportunity here. On the Red Lake side, or the right side of this image, this is the Red Lake Mine Complex. And what we're looking at here is effectively cut cross-section through the earth showing you the deposit. Obviously, it didn't look like this. In 1949, they would have started mining right at the surface here. And over time, it's developed out such that you now have 4 shafts across it. You're mining at a depth here of 2.5 kilometers below surface. When you look on the left side of our own PureGold mine, we're looking at resources and reserves here that sit in the top kilometer. So effectively, we go from surface down to 1 kilometer depth. In the background, historically, a parallel structure was mined 2.5 million ounces. Today, we've got about a 2.5 million ounce resource in that top kilometer. So collectively, it's already a 5 million ounce system, but it's only half defined. In other words, if you were to strip back 30 years on the Red Lake Mine Complex, it would look almost identical to what we're showing on the PureGold side. Importantly, we do have a deep drill hole here, 14.3 grams per ton over 2 meters. It sits 2 kilometers beneath the surface, and it gives us a strong anchor point, a piece of evidence, if you will, that shows that that deposit has the potential to continue to depth, much like the Red Lake mine to the right side. If we look at it in plan, it looks something like this. So this is a plan map where we've taken our project and we've projected all our resources and reserves to surface to give you a sense of, again, the scale. From the bottom left here on what we call the wedge zone up to the top right, we're looking at 7 kilometers of strike length on this deposit. The colors represent phase, if you will. The red, the dark red color is our phase 1 mine plan. This is where we're building a mine today within this footprint. The pink color that we show here are discoveries that we've made over the last 3 years. We already have resources in those areas. We've already done early stage engineering work to look at how they might be mined and what kind of productivity we could get out of them. But they were earlier stage, so we didn't consider them when we conducted our feasibility study. We see that as an opportunity for a second phase of mining and ultimately for growth, potentially through an expansion of the plant. I want to highlight some of the grades that we show here. In operation, our phase 1 mine will be the 5th highest grade mine in Canada and the 17th highest grade mine on the planet, which puts us in about the 95th percentile. In other words, we'll be higher grade than 95% of the producing mines out there today. And obviously that has a real opportunity to drive strong margins particularly in today's gold environment. When you look at the Fork Zone, the Wedge Zone, the Russet South Zone, our discoveries in each of their own right, they have very high grades in drill hole intercepts in those areas. But I want to draw attention to the 8th zone right here and the grades that we see here. 4.3 meters, 466 grams, 5.5 at 342. These include smaller sub-intervals of kilograms per ton of gold. These are fantastic results. So I'll step back for a moment and just tell a story about when I was in the Red Lake mine in the mid-1990s. At that time, the Red Lake Mine Complex was owned by 2 different operators. There's Placer Dome on the left side of the deposit, and you had Goldcorp on the right-hand side. And Goldcorp was averaging about 50,000 ounces a year at a grade of about 8 grams per ton. And they actually launched a strike. And during that time, they took the opportunity to explore, and they discovered what is today known as the high-grade zone. The high-grade zone transformed Goldcorp. It took it from a fledgling company into, at its peak, a $45 billion US company, really driven out of that one discovery. From a production perspective, it took it from a 50,000 ounce producer in the late 1990s to over 500,000 ounces of production at 77 grams per ton by 2004. That kind of transformational growth opportunity is something that really excites us. And when you look at the 8 zone, our own high-grade zone, it shares the same geologic environment, it has similar grades, and it's open for expansion. And we think this will be a real driver for future growth within PureGold. The last point I'll make before I step off this slide is when you look at resources and reserves and building out a mining company, one of the key risks that you want to address is geological risk. Is the deposit really where you think it is? Is it the grade you have estimated? And the only way to really reduce that risk is through drilling. And so when you look at the drilling that's gone into defining our resources and reserves, you can see it up there, more than 1,300 kilometers. It's 1.3 million meters of drilling. You think about that for a moment. It's an incredible number. I've not worked on a project outside the Red Lake Mine that has that kind of drilling to support a mineral resource estimate. When you look at our phase 1 mine plan in red and the average spacing between drill holes, it's 6.5 meters. That means when you're in the deposit, you're never farther away than 6.5 meters from a drill hole. And so that gives you a lot of confidence in terms of the grade and the continuity and the orientation of the deposit. And it is a huge de-risking exercise with respect to a new mining operation. So in the next slide here, I'll show you what that looks like. This is a cross section now. So we've cut a slice through the earth running along the length of the deposit. And you get to tie in a number of the different themes in this one image. From a scale perspective, we run 10 kilometers from left to right. So this is, again, a very large mineral system in place. When we look at grade, every dot that we show in here is a drill hole intercept that intersects the mineral structure or the deposit. And they're color coded by grade. The pink dots that we're showing here are 10 grams per ton or higher. There's over 13,000 of those intercepts that pierce this deposit. And so you can see the incredible grade that we show across this. The mass of material that we show here in the center of the screen, that's our phase 1 mine plan. It stretches from surface down to a kilometer. Again, at 2.1 kilometers below surface, we have a drill hole here that intersected the deposit. A big sea of white space in here that we see as future opportunity to grow out the deposit to depth. Recall that at 2.1 kilometers, we're still a half kilometer shallower than the Red Lake Mine to the north of us. Moving to the left, we have the 8 zone. This is our high-grade zone. Again, you can see some of the drill holes that we've drilled into this part of the deposit. And again, it is wide open for expansion, down plunge, and back up to surface. Moving further left, we have the fork zone, the wedge zone. They start at surface. We've drilled them down to about 300 to 500 meters below surface. They weren't considered as part of our phase 1 mine plan, but it's an area that we're actively drilling today, looking to grow those resources and ultimately layer them on top of that phase 1 mine plan, potentially through an expansion of the plant to drive value for our shareholders. Further to the right on here, you can see a number of high-grade hits that sit in the same corridor, if you will, within the PureGold trend, with really very little follow-up. Longer term, this is where we see it growing out, and so clearly we view the main part of the deposit as having the potential to continue down plunge, as we show it here with the arrows. The 8 zone with potential both up and down plunge, and then of course fork and wedge sitting on the left side. They have a different plunge orientation that really is a geometric relationship between the fault lines that control the gold and the rock that hosts it. And so to that end, we announced about a month ago a very aggressive exploration program. And this is one of the unique attributes of our company. Usually when you look at a company that's in construction, that's on the cusp of production, all of the capital is going into completing that construction program and generating cash flow. Because we're very well funded with a strong buffer as we move through into first ore delivery and our working capital period, we have initiated a very aggressive exploration program. And so we've got first phase, 30,000 meters of drilling with a combination of underground drilling and surface drilling. Really, there's 3 goals with respect to that exploration program. 1, we're looking to convert resources to reserves, primarily in the footprint of the phase 1 mine plan. 2, we're looking to grow our high-grade discoveries to ultimately consider them as part of an expanded mine plan. And 3, we're looking to expose the 8 zone for its true size potential and growth potential and make other discoveries like the 8 zone, as we see it as having a real opportunity to really transform the company moving forward. When we look at the phase one mine plan, we're somewhat limited by the feasibility study we put out and the metal prices that were used at the time. What we're showing here is $1,500 US per ounce. Today we're about 325 or $340 an ounce higher than that. When you look at it from today's perspective, revenue would be $2.5 billion. Internal rate of return pushes up towards 60%. Our after-tax free cash flow is about $850 million. After-tax net present value is about $600 million. And a lot of that's driven by grade. You know, again, at 9 grams per ton, we're one of the higher grade mines in the planet. That drives a low cost structure. With US 787 all-in sustaining costs, we're looking at a margin today that's higher than $950 US per ounce, or on Canadian dollar terms, we're about $1,450 an ounce. We've gone through a period of incredible margin expansion over the last year, and certainly we think we're very well timed to deliver this to the market. Importantly here, though, I want everyone to bear in mind that this is our phase one mine. We very deliberately took a portion of our mineral resources and completed a feasibility study to realize an opportunity in a brownfield site for near-term cash flow. But we are aggressively moving our discoveries forward. We are have already defined resources in those areas. We've done early stage engineering, we've built out mine plans, and our goal here is concurrent with operations to look at bringing those on stream to improve the production profile and drive up cash flow year over year. So when we look at cash flow, it looks like this on an annualized basis. It's color coded by metal price. Today's metal prices takes us to the top of the bar. You can see that in year 5 and 6, we're driving about 200 to 210 million in cash flow annually. And that's really driven by that high grade 8 zone underground. And so when you look at underground, we started our pre-production underground development in December of last year. And what that means is we're underground, we're effectively doing waste development, we're tunneling out to open up the deposit. And really the idea here is to open up as much as possible before you turn the mill on. And really that allows you to draw mining from various areas underground. To date, we're achieving about 60% better than our feasibility plan. In other words, we had a plan for a certain advance rate, and we're doing 60% better than that, which means we're opening up the deposit faster. And that has potential to have a very profound effect. First, we're getting deeper faster. So when you look at that year 5 mining of the 8 zone, we think that we can bring that forward to year 3. In other words, compress the cash flow to the left-hand side of the curve here, closer to mine startup. Secondly, as we open up the deposit faster, we can make choices about which areas to mine first and optimize on grade. In other words, again, trying to bring that high grade forward and maximizing our cash flow in the early years of operation. Longer term, the gray line is the way we see our asset developing. So we're looking at spending some money in year 2 to bring those discoveries on stream, and then pushing the cash flow or production profile upwards, and then carrying that on for the long term. The decline that we see here, starting in year 7 downwards, is an artifact of an underground mine. When you look at it, it's far more cost effective to drill out resources and reserves from underground than it is from surface. And so when I showed that cross section through the earth earlier and showed the potential to expand down plunge, that's what we would be addressing with drilling from underground. One of the simple ways to explain that is when you look back at my experience in the Red Lake Mine complex in the mid-1990s, we had 5 years of reserves at that time, and we're sitting here 25 years later, and they're still with 5 years of reserves. And that really has been addressing it through underground drilling down dip on the deposit. This is a shot taken from underground in our PureGold mine, and the words here again reflect where we see value being driven. We truly do believe that we're just scratching the surface here. We're only getting started with the PureGold mine. But importantly, when you look at value creation in our sector over the last 20 to 30 years, it really has been driven by what we call brownfield sites, historic mining operations where new discoveries have been made. I talked about the Red Lake Mine complex and the discovery of the high grade zone and how that ultimately drove Goldcorp to be one of the largest miners on the planet. More recently, we've seen a company called Kirkland Lake Gold who made deep discoveries at a Macassa mine in Canada, also the Fosterville mine in Australia called the Swan Zone. It took both of those assets from sub 50,000 ounce producers to, in the case of Fosterville, 620,000 ounces of production last year, and it's turned Kirkland into a 17 billion Canadian dollar company. And when you look at our shareholder registry, that's a driver behind these 4 key strategic investors. Rob McEwen is the founder of Gold Corp. He was the driver behind the Red Lake discovery of the high-grade zone, and he was the lead investor when we acquired this asset, and certainly recognizes the opportunities that Red Lake provides. Eric Sprott is a legendary resource investor in Canada. He's single-handedly been financing the mine sector over the last 18 months. Last July, he put $20 million into PureGold to fund the construction of our mine. And more recently, he approached us and said, look, I like what I see in the 8th zone. It reminds me of the discoveries we made at Kirkland Lake Gold. I think this is the opportunity to be a company maker, and I want to fund and expect a really aggressive exploration program. And to that end, he put in a further $10 million investment. And so he sits there as a 12% shareholder today. We also have two senior producers, AngloGold Ashanti, number 3 gold producer in the world, and number 1 gold producer, Newmont, as shareholders. Anglo is a 15% shareholder. Last year, they increased their ownership, and I certainly wouldn't discount their intentions moving forward. They've been very supportive from day one. They love the team and love the location and love the assets, and have been behind us every step of the way. So I want to thank you very much for your time for this quick introduction to PureGold. We're really excited about where we sit right now. We're on the cusp of production. We're in a rising gold market, and importantly, we're located in Canada, so we have the benefit of a weaker Canadian dollar. We are starting to see a re-rate as we move through to first gold, but importantly, we're already thinking beyond that. We're looking at where the growth is going to come from, and we think that we're really just at the beginning here with respect to developing our true value in PureGold. So thank you very much for your time, and we'll open up for questions.
Darin, thank you very much. It sounds like you've got quite an amazing resource already and huge potential ahead of you. So we look forward to seeing how things develop. As I said, if you want to ask a question, please use the chat box at the bottom, the Q&A box, to input a question. We've had a couple ahead of time, and we've had a few today, so I'm going to start asking a couple of questions. The first one, Darin, is are there any rights over the area from local or native tribes?
Yeah, so we signed a what we call a project agreement with 2 First Nations here in Canada, Wabauskang and Lac Seul First Nation. They are, located 100 kilometers away in the case of Wabauskang, 350 kilometers away with respect to Lac Seul. But that really cements them as partners in the project. They'll have opportunities for jobs, contracts as we build out the mine and operate the mine. And importantly, they will receive some revenue from the mine as we move forward. So with that project agreement in place, we have their support in moving forward.
Okay, thank you. And we saw a slide there which will show quite prestigious cash flow. And one of the questions coming in is, what are the plans for the cash flow once you start producing? Will you look to acquire more properties or return cash to shareholders through dividends?
Initially, at least, we see a very strong organic growth platform in front of us, as I described through the presentation. Obviously, we're fairly aggressive right now with the drilling program, looking to grow resources in our surface discoveries. When you look at the opportunity here, our average annual production sits at around 100,000 ounces a year over the 12-year phase 1 mine plan. We see potential to push that towards 150 to 200,000 ounces a year with growth of those surface resources and expansion of the mine plant. And that's a real driver of value for our shareholders. So that'll be the initial focus. Longer term, I do see an opportunity to build out a low risk jurisdiction mining company. Will we return money to shareholders with respect to dividends in the future? That's obviously has potential, but initially it'll go into that organic growth platform.
Okay, thank you. There's obviously a lot of drilling. A couple of questions have come in on this, just about Newsflow. I guess, when are we likely to hear more news on drilling? Just could you give us a feel for how that's going at the moment?
Yeah, again, I think that's a really exciting opportunity here with our first gold delivery, only 4 months away, but yet embarking on a fairly ambitious exploration program. We have a period here over the next 6 to 18 months, really, that's going to be very newsy, if you will. We put out results a couple of weeks ago with respect to underground drilling, including 46.7 grams per ton over 7 meters outside of one of our mining shapes, and we continue to drill underground. We've now got 2 surface rigs active on the project, both drilling on our wedge zone, which sits on the south end of the mineral system. I would anticipate that we will see drilling news out every 2 to 4 weeks from now through not only this year, but all the way through next year as well. And so we'll have a pretty pretty steady news flow as we move through the next 18 months with respect to our exploration work and growth story. And then, of course, as we move closer to production, we'll see operational updates on that front as well. So it will be quite newsworthy, again, over the next 18 months.
Great. Sounds like a lot of news coming through. First pour is expected this year. Couple of questions around production. One says, are you expecting the first production to be 100,000 ounces by Christmas? I don't know if you've used that or quoted that figure before. Perhaps that's in research. Maybe you could comment on that.
No, we won't. The first ore delivery to the mill will be in early December. You'll see some production come out in December, but commercial production will come in towards the end of Q1 of next year. And we haven't forecast at this point what production will be in that first year, but we will do so before year end.
Okay, thank you. Red Lake is a long-established mining zone. What caused PureGold to believe that it would likely be successful, bearing in mind that the area is historically well trodden by previous gold prospectors?
Yeah, it's an interesting question. When you look at Red Lake, it's as I said, it's been mining continuously for 100 years, but because of that long history, in Canada land tenure is a little bit different. We have patent claims, which means we own both the mining rights and the surface rights. And as a result of that, it really hasn't seen a lot of different ideas come through the camp. The particular property we hold today was held by our predecessor for 20 years, and they did very little to move it forward. And prior to that, it had a long, 36-year mining history. I think one of the key supporting, pieces of evidence in terms of why we think the potential is incredible moving forward is you just look at the work we've done over the last 4 years. Fork Zone, Wedge Zone, Russet South Zone. These are new discoveries that start right at surface, and we've drilled down now to 300 to 500 meters below surface, and we're continuing to grow those. I think that in itself speaks to the prospectivity that we see on the camp and our ability to make new discoveries.
Okay, thank you. Got two sort of related questions here around in cash or cash on the balance sheet, I guess. So one, does the company have sufficient cash up to production in December? And secondly, are you open to joint venture possibilities to perhaps share costs with maybe another Canadian major such as Barrick Gold?
Yeah, no, we're not looking at a joint venture relationship at this time. We are fully funded production. In fact, we've got excess funding in place such that we can drive a fairly aggressive exploration program. When you look at the cash position today, we're 90 million Canadian. Through our working capital period, we're looking at a buffer of about 25 million Canadian, and on top of that, we'll be spending 15 million in exploration. So, between the 25 and 15 there, you're looking at a buffer of about $40 million moving through into production. So we're well financed through to generating cash flow.
Decent contingency there, then, by the sound of things.
Mm-hmm.
As you go into winter time, you start up production. How dependent, I guess, is production on the weather? Can it be impacted negatively by severe or harsh weather?
Yeah, not at all. It is a underground mining operation, and so all the activities occur in a regulated environment, if you will. It's pretty steady temperature year round. When you look at exploration, in fact, it's actually easier to operate in winter because the ground freezes up and you can move around much more efficiently. So there's no impact whatsoever with weather.
Okay. And if you did look at, say, the risks to this from an investor's point of view, what would you sort of put as the top of your top three risks from an investor's point of view?
Number one risk would be COVID-19. We're looking right now at building a mine during a pandemic, which, I've said this a number of times, I wouldn't wish that on anybody. We are located in Red Lake, Ontario. We're within a broader Northwestern Ontario region where there's 0 cases today. Long history of mining. Our staff work and live in Red Lake. Our contractors are coming from Northwestern Ontario, so we have been able to manage the risk thus far. I look at our procurement, things are arriving on schedule and we see no risk at this time, but that's one area I would highlight. If we were to see a delay in the delivery of some of the, the long lead items that we need to complete our mine, that would be one risk. Number two, this is a lighter risk, but we are permitted as a mine today. We are amending those permits. We're in the final stages of doing so and anticipate having those all in hand in the next 1 to 2 months. But obviously, if we had a delay in those, it could impact the start date of our operations. Number three, I think I would talk about staffing up. Certainly a year ago, when I looked at moving from a very, very small workforce to in operation workforce of 250 people, I would have highlighted that as a key risk. We've done very well. We are sitting at as I say, just over 100 employees today. We've addressed the entire operational team on site, and I think we're in really good shape. But obviously, if we had trouble attracting the talent to complete the workforce, that'd be a risk as well.
Okay. In the presentation, you mentioned that you had quite decent support from 4 sort of well-known gold mining specialists and experts. A couple of questions here asking, what's your own economic exposure or to the company, and what's the exposure of the other sort of key members of the management team in terms of their shareholding?
Yeah, so we collectively as a board of management group, we hold about 5%. Myself, I have 1.5 million shares of PureGold, and certainly my economic fortunes or future are tied to the company 100%.
Thank you. I mentioned this before we started, which was the share price has had a pretty meteoric rise, and one of the listeners has also commented and said, look, the shares have gone up an awful long way. Why would you encourage a new investor now to buy shares at current prices?
Yeah, it's a good question. I think one of the things to look at is what is a 100,000 ounce per year producer worth today, and particularly worth in a jurisdiction like Red Lake, Ontario. I often highlight West Dome, which is located in Ontario. They've got a market capitalization today that's between $1.5 and $2 billion. They produce less than 100,000 ounces a year. They are drilling off a deeper, high grade zone that's driving some value for them. There's others around there that have similar valuations. So I think, based on our phase 1 mine plan, re-rating as we come to production, a strong gold market, a weak Canadian dollar, I think that we're seeing the re-rate as we come into production, and I think that will continue. So the way I like to look at it is you're getting this phase 1 mine plan for what you're paying for, all of the opportunities with respect to the surface discoveries, opportunities for growth through potentially an expanded mine plan and throughput, and that real potential for a transformative discovery and expansion of the 8th zone are reasons to buy PureGold today.
Okay, thank you. We've got a couple more questions that have come in, and just a reminder, if you do want to ask a question, please use the Q&A function at the bottom of the page. Question here asking, would you consider selling the project? Are you open to any offers for a sale of the project?
We're 100% focused on 2 things right now. One is execution. Obviously we need to deliver on our mine and bring that into production by the end of this year. That's priority number 1. 2 is looking to establish the true value through the exploration work we're doing and accelerating our engineering work on our phase 2 expansion, if you will. Obviously, everything that we like about the project is attractive to a range of companies out there. We've addressed all the things I highlighted right at the beginning. Jurisdiction, I don't think you could be a better jurisdiction with respect to both the geographical location and the geological endowment potential. From a grade perspective, again, we sit at 95th percentile with respect to our grade, and that obviously has an opportunity to draw really strong margins. It's a big mineral system already, and we're demonstrating the real growth potential. So, are we attractive? Yes, and at the end of the day, we would have to look at any opportunity that came forward if it presented itself, but that is not our focus right now.
Okay, thank you. Is there a plan to hedge gold production or hedge the price of gold that you sell at?
We are not looking at hedging right now. I feel pretty strongly about the strength of the market right now. One of the things that we will evaluate from time to time is currency protection. Obviously we've got a flux in the Canadian US dollar, and we want to maximize opportunities on that front.
Okay. A question just relating back to, I guess, the first 100,000 ounces. I think you referred to that in terms of valuation comparators, and thinking about, when do you think you might get to producing 100,000 ounces? Is that, a year away or a few years away? What are your thoughts on getting to that level?
That probably is directly related to how the underground capital development work goes. And so I indicated that we're doing 60% better than planned today, and that provides a real opportunity in terms of opening up the mine faster. When you look at the 8th zone, we'll be driving up over 100,000 ounces of production when we reach that 8th zone. Currently showing as year 5, but I think we'll see that as early as year 3. So I would see us ramping up fairly quickly to that threshold.
Okay. And then just a follow-up on in terms of hedging the gold price. Are there any contingencies in place if the gold price should, come off these highs and suffer a setback?
Yeah, I think when you look at our project, we are economic at $1,100 per ounce. We're sitting today at 1,840, so there's incredible margin that's built in the project today. Obviously, I think we're very well timed with first production by the end of this year. When you look at payback, we've dropped into that 1 to 2 year period with current metal price, and so obviously that'll be a road drive for us as we move forward. Beyond that, contingencies, we're looking at hedging, and we're not really looking at that at this time, but we'd continue to evaluate it as we watch the markets moving forward from here.
Darin, thank you very much. We don't have any more questions coming in, so we're coming to the end of the webinar today with PureGold Mining. Thank you very much for attending. Darin, thank you very much for telling us the story so clearly and explaining the exciting prospects in front of PureGold. Everyone attending, thank you for attending. As you exit the webinar today, you're going to come to a survey. We'd really appreciate it if you just spend, it's only about a minute, just answering those questions. And if you have any questions that haven't been answered in the webinar today, you can send them to info@yellowstoneadvisory.com. So thank you for attending, and we hope to see you all soon. Goodbye.